Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify, or wherever you listen. It's Tuesday, the 26th of November in London. I'm Caroline Hepke.
And I'm Stephen Carroll. Coming up today, the dollar rallies and stocks drop as US President-elect Trump vows to hit China, Mexico and Canada with extra tariffs.
The UK Chancellor vows not to hike business taxes again as the Prime Minister outlines plans to reduce welfare spending.
Plus a €100 billion test. Ireland's political parties are making big promises of how to spend their tax bonanza ahead of Friday's election.
Let's start with a roundup of our top stories.
Donald Trump has vowed to implement additional trade tariffs on China as well as Canada and Mexico. Posting on his Truth Social network, the US President-elect said he would impose additional 10% tariffs on goods from China and 25% on all products from Mexico and Canada. Jennifer Hillman is the former general counsel at the Office of the US Trade Representative.
I think, again, you can expect this to be very, very transactional. And I think that's part of the reason for announcing it well before he's even in office. I mean, he is clearly looking for, and I would say, Canada and Mexico to come to him with offers of things that they can do.
While Jennifer Hillman believes it's a negotiating tactic, Trump himself cast the new levies as necessary to clamp down on migrants and illegal drugs coming across borders. Bloomberg understands that shortly after Trump's post, Canadian Prime Minister Justin Trudeau spoke by phone with the President-elect discussing border security and trade.
The dollar has rallied and Asian shares dropped as the president-elect's comments ratcheted up concerns about his America First policies. The Bloomberg Dollar Spot Index surged as much as 0.7% before paring gains on the news, which came just days after Trump nominated Wall Street stalwart Scott Bessent as US Treasury Secretary. It was a move that markets had seen as a sign the incoming administration may take a more measured approach to tariffs. Speaking to Bloomberg before Trump's comments on trade, the Minneapolis Fed President Neel Kashkari gave his view on potential China tariffs.
There's obviously the risks of potential tariffs back and forth between the U.S. and China, which are notable. The other big concern is just the domestic Chinese economy and the slumber that it appears to be in. From our analysis, the heavy weight of the housing sector that has been a driver of Chinese growth for so many years is now appears to be weighing down the Chinese economy.
Minneapolis Fed Chief Neel Kashkari also told Bloomberg that he believes it's still appropriate to consider another interest rate cut at the central bank's December meeting. Kashkari says the US economy's resilience in the face of higher interest rates suggests that the neutral rate, where policy neither weighs on nor stimulates economic growth, may be higher now.
The UK government is setting out its plan to reduce its £137 billion benefits bill by getting more people into work. Keir Starmer's government will publish a Get Britain Working white paper today, but the Prime Minister risks further backlash from Labour's controversial first budget as companies warn of tax-induced job cuts. Speaking at the Confederation of British Industry's annual conference yesterday, the Chancellor Rachel Reeves defended her spending choices.
I've had lots of feedback on the budget, but what I haven't heard is any credible alternatives to what I did to put our public finances on a firm footing. What I am really clear about, and I've said it already a couple of times today, that public services now need to live within the envelope that we've set. We will not be coming back to top up those budgets. We have set the envelope for public spending.
Rachel Reeves speaking there. The government's plans are part of Labour's promise, first announced in July, to increase the employment rate to 80% from currently just shy of 75%. Welfare cuts won't be announced until the spring.
Staying with the UK, where sources say the government has supplied Ukraine with dozens more Storm Shadow missiles. Bloomberg understands the weapons are the first given under Prime Minister Keir Starmer, who has pledged continued support for the country. The deliveries were not publicly announced and were ordered after Kyiv ran low on the long-range missiles. Speaking before a G7 meeting in Italy, the Foreign Secretary David Lammy said continued international support for Ukraine is crucial.
It's hugely important that all colleagues across the G7 continue to stand with Ukraine for as long as it lasts, and we are confident that Ukraine can have the funds and the military equipment and kit to get through 2025.
David Lammy speaking there. The decisions by the US and UK to allow their weapons to be used for strikes inside Russia for the first time came in response to Kremlin deploying North Korean troops to fight against Ukraine. That's according to officials from both governments.
The European Union is proposing to sanction Chinese firms that allegedly helped Russian companies develop attack drones used against Ukraine. The European Commission is also considering placing additional restrictions on Russian oil tankers to curb Moscow's ability to circumvent existing measures. The proposed sanctions would target over 50 individuals and nearly 30 entities, including Russian military manufacturers, Chinese firms and North Korean defence officials.
Top Israeli officials are meeting to approve a ceasefire deal with Hezbollah in Lebanon. Earlier, the Israeli ambassador to Washington said that an agreement to end the war was getting closer, though some issues still remained. A deal would mean an end to over a year of hostilities between Hezbollah and Israel. Israel's ambassador to the United Nations, Danny Danon, says there are reasons to be cautiously optimistic.
We are moving forward on this front. As I said many times, our goal was very clear, which is to push Hezbollah north of the Litani River. We haven't finalized it, but we are moving forward. I assume that the cabinet will meet today or tomorrow to discuss it.
Israel's UN ambassador Danny Danon speaking there. The country's security cabinet is expected to vote on an agreement today, and passage is considered likely, according to an official.
Those are your top stories. On the markets, the S&P 500 closed yesterday in the green, up 0.3%. 10-year yields closed down 13 basis points, and gold fell by 3.4% as Donald Trump's Treasury Secretary pick was cheered by markets easing concerns over the deficit. We did see the euro climb above 105 briefly as it strengthened against the dollar, but we have seen some moves after the announcement by Donald Trump of his promise to impose fresh tariffs. The dollar strengthening again on the Bloomberg dollar spot index, up 0.25% today. The Mexican peso 1.3% weaker, the Canadian dollar 1% weaker, and the Chinese yuan has dipped as well 0.25%.
Now, in a moment, we'll get more on Donald Trump's tariff threat, plus how Ireland's political parties want to spend their budget surplus if they win Friday's general election. But first, another story that has caught our eye that we've been reading this morning.
This is how a hedge fund is seeking out the next generation of finance geniuses. World Quant has been holding its International Quant Championship, where competitors crunch numbers to come up with their own alphas, which is the jargon for mathematical models that can predict asset performance. So they're pitched against each other to see who comes up with the best hypothetical returns at an event described by our colleagues Justina Lee and David Ramley as part rave, part Shark Tank episode.
I love it. That's great.
It's quite fun, and there's pictures from it as well about how this company, or this hedge fund rather, has been out there essentially trying to crowdsource talent to find the next, algorithmic ways to make money.
It's absolutely incredible. This isn't niche. It's thousands and thousands of people, and there were loads of competitors from universities, but also sort of any walk of life, really. Lots from India, lots from Asia. And yes, things are also getting faster. The returns that you make, that edge that you might discover in the markets, apparently, according to Justina Lee, who's been writing about it, is getting quicker. So yes, these hedge funds are looking for the finance geniuses of the future.
Plenty to read more on this, Bloomberg.com, or of course on the terminal. But let's bring you more on Donald Trump's pledge now to levy more tariffs on imports from Canada, Mexico and China. Our breaking news managing editor Derek Wallbank is with us for more. Derek, markets seem to be taking this threat pretty seriously. Should we be taking Donald Trump's promise at his word?
Yeah, I think this is one of those things where, he's not just floating something, he's saying he's going to do something on day one. So I do think that you take that seriously. I do think that the market reaction makes a certain amount of sense. That having been said, if I wanted to, note a point of calendar item, you have somewhere about 2 months or so, ballpark, maybe a little bit less, until Donald Trump is sworn in as U.S. president. Justin Trudeau was on the phone with him after the announcement. I'm sure that they had much to talk about. And so, there certainly will be openings for diplomacy because, after all, we're one more Truth Social post away from, some of this going maybe a slightly different direction. But look, Donald Trump, ran for president on this idea that tariffs were going to be a critical foreign policy plonk. You knew that he has had his views on immigration, particularly the northern and southern borders of the United States, overland immigration, and the some of the things that he feels are dangers accompanying there too. So I'm not necessarily fully surprised that this is one of the first massive foreign policy announcements that the president-elect has made.
We also, though, it's interesting that it's 10% tariffs on goods from China, but 25% tariffs on goods from the US's near neighbours. What sort of effect would those sorts of tariffs have on the US, but also perhaps the trading partners?
Well, there's a couple of things there, right? The 10% for China is an add-on, so in addition to other things that are currently there. But remember that Trump, during the campaign, was talking about additional, a tariff level of 60% or so. So how he squares all of that math is going to take a lot more than 280 characters to sort of lay out, and where all of this, may wind up so that people can do their own maths. What I would say, though, is that there has been an observed move that you've seen in the run up to this election and transition, with a lot of Chinese investment in Mexico. This idea that, look, if Trump was going to take some tariff action against China, that maybe Mexico might be a place to sort of, to place some of those operations, maybe find a way to transship in ways that would dodge around there. This would, put a certain amount of doubt into those plans if that was the idea that people had going around them. But I do think that, broadly speaking, for those of us who covered the first Trump administration quite closely, we all remember when Donald Trump was talking about pulling out of NAFTA and had a full reorganization and renegotiation of the trade deals with some of the Americans' closest partners on the world stage. So it should not be a surprise. I cannot emphasize this enough. It should not be a surprise to people who consider themselves friends of America or foes of America that if there is some trade dispute with the new administration that is coming in January of next year, it should not be a surprise at all if tariffs get onto the table.
Okay, Derek Wellbank, our breaking news managing editor, thank you.
Now, Irish voters go to the polls on Friday with a very different dilemma to many of the elections that we've seen in Europe this year. The country is flush with cash from a surge in corporate taxes on mostly US firms, leading political parties to make big promises on what they plan to spend it on. Our Dublin bureau chief, Jennifer Duggan, joins us now for more on this story. Jennifer, very good to have you on the programme. How much money does the next Irish government potentially have to spend?
Yeah, Ireland is in quite an unusual position in comparison to a lot of other European countries. This year, it's estimated that the country will have approximately 24 billion of a budget surplus. 14 billion of that comes from the Apple tax judgment from a European court. So that's obviously boosted Irish finances this year. Most of those taxes come from corporation taxes from the multinationals, particularly US multinationals that are based in Ireland. It's quite a volatile source of income, but yes, it is considerable.
So what worries are there about how vulnerable this revenue stream might be? We've just been hearing about Donald Trump's promise on trade tariffs. Is that something that Ireland's worried about? Are they setting money aside?
Yeah, absolutely. I think even before the US election, there have been concerns about this revenue stream, because it comes from companies that are from outside of Ireland, and particularly it's very concentrated. So just 3 companies make up 43% of all the corporation tax take, and obviously that makes Ireland very vulnerable to shocks within those companies. Also geopolitical shocks. And the government the Minister for Finance has for a long time called these this type of tax revenue windfall, which means that they do understand the volatile nature of it. A Trump presidency obviously certainly brings, a greater concern there in terms of the stability, particularly when it comes to tariffs and, any changes in the US and corporation tax. So yes, there are definitely concerns from economists and politicians here.
OK, the bread and butter issues, though, in this election are surely the cost of living. There's also an acute shortage of housing. How are the parties talking about planning to tackle those?
Yeah, it's an interesting campaign for sure. There's certainly a lot of talk about different measures. One of the things that does get discussed is how to kind of protect those finances. And I should also say that Ireland has set up its own sovereign wealth fund with a percentage of the earnings from corporation tax to go in every year for the next 10 years. That sovereign wealth fund is estimated to grow to 100 billion, which would make it one of the top 15 largest funds in the world. So that's, an effort to protect the money. But in terms of the election itself, yeah, certainly there's a lot of proposals. The incumbent government, a coalition of a three-party coalition, they introduced a budget in October, and that was described as a giveaway budget. So that was certainly seen as the first part of the government party's efforts to woo voters. There was a lot of one-off measures, child benefit payments, energy credits. So a lot of kind of very attractive measures for voters.
Yeah. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.